Imagine you're holding a single crisp $100 bill. It feels solid, real, valuable. Now imagine trying to turn that single bill into a brand new house. Impossible, right? Now imagine convincing a complete stranger to give you that house using only a promise. That's the magic trick. And for the last 800 years, there has only been one group of people licensed to perform it: the banks. But here's the thing about magic tricks. Sometimes they go horribly wrong. Sometimes the magician saws the lady in half and she doesn't get back up. And when that happens on a global scale, hundreds of billions of dollars don't just disappear, they evaporate into thin air. Millions of people lose their jobs, their savings, their homes, and the entire world is left wondering, how did we let them fool us? Today, we're pulling back the velvet rope. We're going to look at where this magic trick came from, how it exploded into the insane 30,000 bank multi-trillion-dollar labyrinth we have today, and why a simple wooden bench in Italy is the reason you're probably a little scared to check your savings account right now. Let's teleport. It's the 11th century. You're not a YouTuber, you're a wool merchant from England. You've sailed to Pisa, Italy, the heart of European trade, to sell your goods. You find a buyer, you make the deal, and then the nightmare begins. The buyer opens his pouch. He's got shiny Florentine florins, heavy Roman coins, and some weird silver piece you've never seen. You've got English pennies. Neither of you trusts the other's money, so you both look around, and there he is. A man sitting on a bench in the middle of the street. This man is a money changer. He'll take your weird coins, weigh them, test their purity, and give you local currency. The Italian word for bench is banco. You sit at the banco to get your money. You're at the bank. But these guys on benches were smart. They realized that hauling gold and silver across pirate-infested seas was stupid and dangerous. So they started writing notes. I, the bench guy in Pisa, promised to pay the bearer of this note 100 gold coins. Suddenly, you didn't need the gold. You just needed the note. This was the Big Bang. Money stopped being just metal. It became information. It became a promise. Fast forward to today. There are over 30,000 banks globally. The top 10 alone sit on a throne of about $25 trillion. 25 trillion. That number is so big your brain can't process it. It's not real money, it's data. So how does this data machine actually work? Let's simplify the magic trick. You, the viewer, work hard. You have $1,000 in your checking account doing nothing. You are the saver. The bank gives you a tiny, almost insulting interest rate for this, maybe 0.01%. But the bank doesn't just leave your money in a vault. They bundle it up with money from a million other savers. Now they have a giant pile of cash. Down the street, there's Bob the baker. Bob wants to open a second shop. He needs $50,000. Bob is the borrower. The bank gives Bob your $1,000 plus $49,000 from your neighbors at a 6% interest rate. The bank just made money using your money. They pay you pennies and Bob pays them dollars. That difference, the spread, is how they pay for the fancy skyscrapers and the pens on chains. In theory, this is beautiful. It's the economy's circulatory system. It turns your idle cash into Bob's new bakery, which hires employees, sells bread, and grows the town. But banks got bored. They looked at this simple, beautiful system and said, it's good, but it's slow. We want fast money. They started building a new game. They moved away from boring long-term loans for bakers and farmers and started playing with short-term, supercharged financial schemes. It became a casino, and the chips were mortgages. Let's look at 2008. Imagine a bank. Let's call it Lehman Brothers. They stopped caring if Bob the baker could actually afford to repay his loan. They started giving loans to anyone who could fog a mirror. No income? No job? No problem. Here's a house. They took 1,000 risky loans to people who couldn't pay, packed them into a big box, put a shiny AAA rating on it, and sold it to a pension fund in Norway as a safe investment. It was a garbage truck painted to look like a limousine. When people stopped paying, the garbage spilled everywhere. The real estate market collapsed. The limousines, the banks, exploded. Lehman Brothers went bankrupt. Trillions of dollars didn't just vanish. The promises were broken. The data got deleted. Millions of people lost their jobs, and their life savings dissolved because the entire magical system was built on a house of cards. Governments had to step in. The US and Europe had to buy up this toxic waste just to stop the bleeding. They slapped on new rules. You must have a reserve fund, a piggy bank for when you break the system again. But the banks, using their powerful lobbyists, fought back against the strictest rules. They said, trust us, we learned our lesson. But out of the ashes of 2008, people started asking, do we actually need them? New models started popping up, like rebellious teenagers leaving home. First, there are investment banks for the people. They don't charge you for every little trade. Instead, they take a small annual fee. This is genius because if your money doesn't grow, they don't get paid. Suddenly, their greed is aligned with your greed. Then you have the veterans, credit unions. These were invented in the 19th century to beat the loan sharks. Think of them as banking co-ops. You aren't a customer, you're a member. You have a vote. Their goal isn't to maximize profit for shareholders in New York. It's to help the community in your town build a farm or buy a house. They took risks during the financial crisis, sure, but they survived better than the giants because they weren't gambling. They were baking bread. And then the internet exploded the whole concept. We got crowdfunding, platforms like Kickstarter. You have a cool idea for a board game or a smartwatch? Instead of begging a banker in a suit, you pitch it to the world. 1 million people give you $10 each. If the project fails, no single person is ruined. The risk is smeared so thin it's harmless. And the investors? They get the joy of being part of something before it was cool. Finally, we have microlending. Forget lending $1 million to build a skyscraper. What about lending $50 to a woman in a developing country so she can buy a sewing machine and start a business? It's small, it's personal, and it fights poverty one tiny thread at a time. It's now a multi-billion-dollar industry. So, what's the verdict? Do we burn it all down? Do we abolish the banks? No, because someone has to move the money. Someone has to be the heart that pumps the cash. Bob the baker can't crowdfund his oven every time he needs an upgrade, and a credit union can't finance a global shipping port alone. The old system, born on that wooden bench in Italy, is broken and bloated, but it's also essential. The question isn't whether we need banks. The question is, who do we trust to sit on the bench? The gambler playing with our future, or the partner investing in it? Because the magic trick only works if we all believe in the magician. And after the last 800 years, I think it's time we started watching the hands a little more closely. Thanks for watching. If you want to keep pulling back the curtain on the systems that control our world, hit that subscribe button. Fin about money.